goodness, what is happening right now? What is happening right now? Test. Let's see if we got everything working here. I think we are live. Let me make sure everything is up that needs to be up. First things first, can everybody see a chart on the screen? That's the first thing. And then number two, can everybody hear me? Can everybody hear me? Let's check those first. Just type in the chat if you can see a chart on the screen and if you can hear my voice. If you can see a chart on the screen, you can hear my voice, hit me up in the chats and let me know. All right, we're getting some let's goes. We're getting some let goes. All right, I think we're good. Woo! What is going on? 360 in the house. Thank you guys for joining me live. I'm so happy you're here. I'm actually really excited about this. First and foremost, I want you to know this video is hosted by, oh, you had to turn the volume up. Okay, this video is hosted by 4cmediaco.com, which, by the way, is literally the best source of breaking and latest crypto news and global finances. You can follow them on Twitter. Make sure you do that. Make sure you set them to alerts so that you're always on top of everything breaking in this niche. Second, please make sure you subscribe to our YouTube channel. And then put us on notifications, put us on alerts, because we have literally turned up the, we've gone to high speed here. And what that means is on YouTube, the plan is to do 3 YouTube videos per week. All right. So the first one that you can start looking forward to is what we're doing right now. And that is YouTube Lives. It has been ages, literally, since I've done anything live with Twitter and with YouTube. And I want to return to that. I want to start, and the reason for that is because crypto Twitter has changed drastically from cycle to cycle. It's become pretty decrepit. In my view, and in the view of most of the crypto influencers that you can talk to out there, they'll tell you that it's pretty much descended into a source of just sheer FOMO or FUD, okay? There's not a whole lot of level-headed perspective out there. There are some. Yes, there are some. There is valuable content out there, but it's not like it used to be. So what our intention is here is to bring that value back to you guys and do it from a level-headed perspective, all right? One that's not swung by emotions, that's not swung by fear, that's not swung on greed. And for those of you that know me, all of my OGs, you know I never panic and I never operate off of FUD or FOMO, ever. So, but what we're gonna do is we're gonna actually assess actual data, okay? And right now you live in a world that is narrative driven, okay? And what I mean by that, when I say narrative driven, is your major news stories, okay? What have we seen in the past year? We've seen wars, rumors of wars. We've seen, economic conditions that are horrible. And throughout this entire time and throughout all of this political upheaval and all of this stuff, you have heard calls for an apocalypse year after year after year. Come on, even since COVID, for crying out loud, there's been calls for apocalypse, major market crashes, and all of these other things. And guess what? They never occurred. It never happened. Now, when it comes to narrative, you do get knee-jerk reactions in the market. But let me explain something to you. Narrative never drives market trend. Narrative never drives market trend. And you can go back and look, I'll just use wars as an example. You can go back and look at every war since the 1900s, since the early 1900s, and look at every war and look at its effect on the market, and almost every time you will see war leading to a bull market, okay? Even though everybody's calling, every time it happens, everybody called for apocalypse. I mean, we've been in one of the worst economies that we've had in forever, as long as people can remember. I mean, it's been a long time, since 2008, since we've been in an economy such as this one. And there's even things about this economy that are worse than 2008. And guess what? The market just keeps going up. despite all the bears calling for apocalypse, all the bears calling for crashes, all the bears calling for this, that, and the other, the market keeps smacking them right in the face. All right? And there's a reason for that. All right? And one of the reasons for that is because nobody wants to hold the dollar. So when you say that there's going to be a major market crash, when you say that people are going to leave these assets, when you say people are going to abandon all hope, abandon investments, abandon things that have actually doing something to increase their wealth, you're saying that they're going to sell that for the dollar. That ain't happening. It's not going to happen because the dollar is constantly being devalued. Constantly being devalued. And even now, people are like, well, how is the market going to keep going up? Nobody has any money. That's not true. Have Americans and have people across the globe had to cinch their belt? Yes, but that doesn't equal recession, okay? Listen, in order for people to be forced to hold the dollar, there's one thing that has to happen, and it has to happen on a global, massive scale. I'm talking incredibly massive scale, and that is layoffs. I'm talking massive. I'm not talking about tech companies releasing people to save money. Yes, there's been some layoffs, but on a global scale, nope. No, there hasn't been. There hasn't been. Not to mention, no one is, people talking about the housing market crashing. The housing market's not going to crash unless everybody's losing their job. Because people bought houses when there was no interest rate on housing. They're not going to leave those houses. So this is why during this entire economic horror story, you've been hearing, oh, the housing market's going to crash. No, and the only way the housing market crashes is if people lose their jobs by the droves and they can't afford their very cheap mortgages because they bought their houses when interest rates were dirt cheap. So all of this narrative that keeps being driven, you've got to learn to look past the smoke and mirrors. Oh my goodness, I need to stop yapping about this. Let's get to crypto. Let's get to the charts. But what I was saying all that to say is, I am literally one of the few people, you can ask the 360 elite, that for the last year and a half, I called for 2024 in spite of economic conditions, in spite of all the narrative with wars. I said the legacy markets, stock markets, precious metals would absolutely dominate, would absolutely destroy and keep making highs. And even now, the Dow is pushing new highs. Gold, absolutely going crazy. The markets, S&P, the NASDAQ, they continue to make new highs. And the dollar continues to look horrible and disgusting. And guess what? The only incentive for people to have cash was high interest rates because money market accounts and CDs were paying 5 to 6%. Well, now the interest rates are dropping. By the way, that market, I'm going to explain it to you. CDs and money market is in the US is $7 trillion. $7 trillion sitting in money market and CDs. Guess where that money's going to go? Take a guess. Why? Because interest rates are coming down now. That's right. The Fed is now reducing rates and therefore money market accounts, CDs. It's going to take some time. It's not going to happen overnight. It's going to take some time. But over the next 2 years, you're going to see those paying less and less. Guess where that $7 trillion is going? Do you think it's going to the dollar? Heck no, it ain't going to the dollar. And guess what else is going to happen? The Fed is getting ready to turn on the printer. Like, the Fed is getting ready to turn on the printer. So you have everything needed for what we've been seeing all year and what we're going to continue to see only now. It's crypto's turn, baby. That's right. It's crypto's turn. So let's take a look at this chart. I know. I just literally spent the first 10 minutes absolutely yapping, but I needed you guys to understand a macro perspective of common sense that sees through smoke and mirrors. When you get a news report or you get a narrative, you need to see it as a smoke and mirror. That means you need to be able to read between the lines and understand what the truth is of everything that's actually going on. Are there knee-jerk reactions to these things? Yes, of course. Of course. But those things are temporary and they're designed to shake you, bake you, and kick your butt right out of the market. That's why very few make any money. There's been more fear over the last year. My goodness. Come on. To scare even the bravest from investing their money. And yet the Dow, the NASDAQ, the S&P continues to punch bears and false narrative tellers right in the freaking mouth. All right? So anyway, I digress. Let's get on to the charts. Let's take a look at Bitcoin. Right here, we have Bitcoin, and let's talk about what has happened. Early cycle theory is dead. I've said it a million times. Was it a valid theory? Yes, absolutely. Absolutely it was valid. All theories are valid until proven otherwise. However, early cycle theory is dead. All right? Bitcoin did not run early because of early cycle theory. Nope. Not even close. Bitcoin ran early because, let me explain it to you and you can go look. I'm not going to pull up the chart because I don't have time, but you can go look. Listen, so all we need is the cycle to be the cycle, but every cycle there are differences. Let me explain the key difference to this cycle that we've never had in the other cycle. And this is important. Are you listening? Are you ready? Are you ready? Here it goes. For the first time ever, we entered a bull market where the supply, the available supply of Bitcoin for trading was at mega lows. See? Because every other cycle before, what happens is when you go into the bear market, all the Bitcoin supply is dumped back into the markets, making the available supply mega high. And so when we enter a bull market, we enter with the available supply mega high. That did not happen this time. As a matter of fact, and think, use your head. Why did the SEC only approve leverage margin Bitcoin ETFs? Think, come on, because I'm about to punch right through every smoke and mirror and tell you exactly the truth of what is happening. Because they scammed it. Because they were able to use leverage margin ETFs, not spot. Spot ETFs just barely got approved. Leverage margin ETFs for Bitcoin have been approved for a long time. Why? So they could use it to manipulate the price of Bitcoin to keep it low while the supply was being bought up. Boom, baby! That is exactly why the dirty SEC had approved margin, very dangerous, leverage, very dangerous, ETFs, and not spot. So this is why price of Bitcoin was able to be driven down while the supply of Bitcoin was being bought and bought and bought and bought. And the chart reveals it, because if you go look at the bottom of the bear market, or as Bitcoin is going down, you can see the intense volume of accumulation going on in Bitcoin during the drop. Intense, more intense than it has ever been in the history of a bear market for Bitcoin. You can go look. The data is there. It's in your face. It's not deniable. You cannot combat this. It's fact. That's right. Once all that has been dried up and bought up while they suppress the price, now go ahead and approve the Bitcoin spot ETFs. Yeah. So why does Bitcoin leave earlier than it normally does? Why does it even reach a new all-time high barely before it's happening? It has nothing to do with early cycle theory. It has everything to do with what they knew was coming for Bitcoin, and that is entrance Wall Street, baby. Entrance of Wall Street. And I've been talking about this since the last cycle. Yeah, Gensler, machine gunning companies. Do you think he cares whether he wins these cases? No. Gensler comes in to the OG crypto world. Machine guns, every exchange. Machine guns company, left after right. Calls this one a security, that one a security. Do you think he cared about winning? Nope, that was not his job. His job was to create fires across the landscape of cryptoverse, the OG cryptoverse, while Wall Street could move in the back door and do what it do. Plain and simple. Plain and simple. He's losing left and right. Gensler is losing left and right. I mean, but he was never supposed to win. He was playing a delay game, a seek and destroy and cause harm, cause FUD across the cryptoverse while Wall Street was moving in. And so you have a Bitcoin that, because of its massive accumulation, because they knew the spot ETFs were getting approved, because we entered a bull market with no supply, you now have a Bitcoin that skyrockets to its old all-time high before its time. And when I say before its time, I'm referring to before the normal time cycle. Yeah. See, there's a reason. There's a reason. Number one, we entered a bull market for the first time ever. We actually entered into the bear market where the supply of Bitcoin was at micro levels. And number two, the Bitcoin spot ETFs. Those are the reasons Bitcoin has climbed when it has climbed. Now, it is at its old all-time high area and is pulling back. And you can see this macro chart right here. This is a 6-month monster. If this was ascending in nature, I'd be concerned. It is not ascending. It is descending. People need to stop calling a descending channel a top. This was your shot at a top. 1, 2, 3, 4. That was your shot at a top. That was your shot. But even then, this resembles no top. No market top. Why? Because whales don't leave liquidity behind. They don't leave it behind. You can go look at every other cycle, and every other cycle the liquidity is grabbed. When you have distribution, people love to use the word distribution, and yet not a single one of them, not that I've seen, has ever used volume to show it. And guess what? Go back to my Twitter feed. I have challenged anybody on Twitter to show me in volume where the distribution is. It doesn't exist. It's not there. See, because what happens when you have distribution is when they spike this, whales massively sell here, massively. But it doesn't exist in the entire last 3 quarters of this descending channel. Not to mention, before they distribute, they go up and they remove the liquidity from the previous highs. Not only have they not done it once, they haven't done it twice, they haven't done it thrice, they haven't done it 4 times, and now, all of a sudden, you have billions of dollars. That's why I've got this up here. TNT Dynamite. Billions of dollars in liquidity. So I guess your distributors must be stupid. Like, they must not know how to distribute. First of all, there's no distribution volume. Okay? Matter of fact, you have 2 completely different things going on up here. What you have is this beautiful thing right here. Look at that descending volume. So most of your volume in selling is where? Where it should be. Profit taking. After it reaches a high, you have normal profit taking. Normal profit taking. When you get a pullback, when you get profit taking, what do you want your volume to look like? I'll give you a hint. You want it to be descending. You want it to be descending. After this part right here, this one, and I'm going to show it to you. So there's your descending volume. There's the meat or the big sellers of your Bitcoin. It ends there. Now watch. All of a sudden, you have a completely different animal. A completely different animal. All of this latter half of the descending channel is accumulation. Yes, say it. Say it out loud. Accumulation. That's what it is. But if you now let's see how good your memory is. You might be saying, but look at that. Look at that. Well, let me remind you that was a global liquidity event, bear trap, which shows up across every market on the entire planet. Yes, it does. It shows up in stocks. It shows up in precious metals. It shows up in Canada. It shows up in China. It shows up in every market in existence. And when we got this, everybody and their mother came out and said, that's it. That's the end. That's apocalypse, which they keep saying over and over. Over and over. They keep saying that. This was not a crypto-centric event. You know what this was? This was a margin liquidity wipeout across the planet. This is not debatable. I'm not giving you theory. I'm not giving you smoke and mirrors. I'm not giving you theory. I'm not giving you horse poo or knee jerk or trying to create some FUD or FOMO. I'm literally showing it to you on the chart. These things are undeniable. They're indisputable. I've issued the challenge multiple times. There's been no takers. And I know people seen it. I know they've seen it. But there's been no takers. That's right. All of a sudden now, so if you could say you had a top, you would have to say that was it. All of a sudden now we have a completely different development here. Which resembles a bottom with a liquidity demand sweep. Yeah. Oh, yes. And now you have a higher low. So technically, this is a higher low. However, with candle bodies, it's almost like a triple bottom. Okay? If you were to run this is not an inverted head and shoulders. Anybody, and I saw people posting this as an inverted head and shoulders. Anybody that thinks the shoulder can be the depth of the head and call it a head and shoulders should not be charting. Stop. You're a coloring book chartist. You should not be charting. This is not an inverted head and shoulders. Okay? In no form of any type of price action does a shoulder come to the point of the head. All right? So you kind of have what I would call this, if you're looking at candle bodies, I'm going to eliminate the wicks, you kind of have a triple bottom. Okay? But even on this dip here, bears had an opportunity to candle body this wick. They didn't do it. They had an opportunity. So from here to here, what you see, yes, from here, where it stops, from here to here, what you have in volume is the absence of true sellers while Bitcoin continues to get accumulated. Yes, yes, yes. Now, what has happened here? We did get a higher high off of this bounce. All my elite expected this because I said, well, it will probably happen. And we longed this, by the way. We have leverage longs on this. We got this spike, and I said, Bitcoin will probably remove this external liquidity. All right, so this represents external liquidity. And because of the space between here and this beautifully layered TNT dynamite potential explosion that we have in our future, I said Bitcoin will probably grab this and pull back. Whoop! Look at that. Bam! It reached in, grabbed this liquidity. Bye-bye. And now we're pulling back. And as of right now, I'm going to zoom in on the 4 hour. All right. Zoom in, zoom in. Now we're pulling back. And we pulled right back to the short-term ascending channel. Now, so I want to bring, so right now we're at a point where I believe things have bottomed. We're entering the crypto cycle, the true part of the crypto cycle. Oh, and by the way, check it out. So what really has Bitcoin done? Because you're going to go from the high. We have 200 days. This is 200 days. This is a descending channel. This is not a top. It's not a top. It's a descending channel. Your opportunity to call this a top ended way back here in the middle. It ended. So, what is Bitcoin done? Bitcoin was early. And now, because of this, It has caught up to the normal crypto cycle timeline as per every other stinking cycle we've ever had. Because we already know Ethereum has not had its cycle. Altcoins haven't even come close to having their cycle. So those saying we had a cycle, it's not even valid. If you were saying the cycle is over, well, the only thing that would have had a cycle would have been Bitcoin. Because there was no changing of the guard. And I don't have time this time because I have literally yapped at the mouth. My intention was to actually do, oh my goodness, have I been talking for 40 minutes? All right, we got to close this up. But my intention was to go through some macro charts. So we're going to do this again. The next time we meet, I'm going to show you on macro charts. We're going to look at market cap for total crypto. We're going to look at market cap for altcoins. We're going to look at Bitcoin dominance. We're going to look at Ethereum dominance. Then we're going to look at the Ethereum and Bitcoin pairing. And I'm going to show you, I'm literally going to, on every macro chart, show you why we are just now entering the normal crypto cycle. Boom! That's all I got time for today. I am going to only allow a couple questions because I am way over. I was literally supposed to only do 20 minutes. And I told Nash, I said, you know, when I open my mouth, it's going to be 2 to 3 times that. So anyway. Yes, Mark, I'm shouting. This is me. This is who I am. This is how I am. If you don't like it, you probably want to turn your volume down. Hope that helps. All right. Question. We'll take a couple questions. We only got a couple of minutes. I promise we're doing this every Monday. Also, look forward this week because around Wednesday, you'll get another video. So I may be able to do some of the macro charts in, and then on Friday, you'll get a video. So the intention is with YouTube, Monday, live, Wednesday, a YouTube video, Friday, a YouTube video. Does that sound good? Does that sound good? Good. Any questions? I'm going to give you like 10 seconds to put up a question. Oh my gosh, of course somebody's going to ask about TEL. I never worry about TEL. I never worry about TEL. Tomas, never. All right, I don't see any pre-workout before. All right, we're going to call it quits. Get your questions ready for next time so that I can do some questions with y'all. But we are going to call it quits. Man, thank you guys so much for being here. I love you. We're just spitting facts, not theory. Facts, data, never FUD, never FOMO. That's how we do it. Until next time, baby. Here comes the boom.